In this video, I will show you the non-repainted version of the Nadaraya Watson envelope indicator. And this indicator, used correctly, can bring you consistent profits in any type of market. This indicator is extremely simple to use. However, there's not a lot of people that know how to use it correctly and make the most out of it. And that is the reason why I decided to share my personal scalping strategy with you today, so that you can increase your win rates and become a profitable trader. So the first thing you need to do to use this strategy is very simple. Just head over to TradingView.com, open any chart of any market that has a high level of liquidity. Note that this strategy works on the 5-minute all the way up to the daily chart. Now you just head over to the time frame section and select the specific time frame that you will be trading on. After selecting your specific time frame, you now head over to the indicators tab right here. Now you simply search for the Nadaraya Watson envelope non-repainted. This indicator is created by J.D. Hardy. So the main goal of this indicator is to estimate the underlying trend and show when price is overbought or oversold, so that you can make a confident and profitable trading decision. But this indicator is not the only indicator that we will be using today for this strategy. So now you just head over to the indicators tab and now you search for the higher high, lower low strategy indicator. And before we continue, we need to make some adjustments to our new indicator. So under the style section, you now unbox or unclick everything except the higher highs and the lower lows. Okay, so now that we set up both of our indicators for this strategy, we are now going to put this strategy into use. And the rules for entering a long position with the Nadaraya Watson envelope indicator goes like this. Number 1. The baseline of the Nadaraya Watson envelope indicator must be green in order for us to enter a long position. Number 2. Price action must be positioned above the green line, and this is a must. Number 3. The price action must also create a pullback or a drawback into that green baseline. But one thing that you really have to make sure of while doing this strategy is that when price is giving you that pullback or drawback, it cannot close below the green line. This is super important, because if price closes below that green baseline, the strategy then becomes invalid and we do not take that trade. Number 4, after we see that pullback or drawback happening, we're now going to wait for price to cross and close inside the red area. When price has closed inside of the red area, make sure to see that current price is now higher than previous higher highs. We only take this trade if price closes above previous higher highs, and this is to make sure that price is heading in our direction and won't reverse on us. If your current setup isn't following the rules of this strategy, be patient and wait for another setup. And before we enter this trade, we simply put our stop loss at the green baseline or under our previous pullback. And for take profit, I would put a 1 to 2 or 1 to 3. But since I like to trail my stop loss, I wouldn't use a take profit and I would just trail it until I feel comfortable getting out. And as you can see, this strategy gives us more accurate entries, and it also enhances our ability to see such setups when they occur. And this is a very good way to build on your trading strategy playbook, so that you can up your lot size according to the setup you are trading. And here you have another perfect example of this strategy, but using it on a short position. And as you can see, price is now heading down, closing in the green area, and the green baseline of the indicator is now red. Rule 1, check. And here we have that pullback that we were talking about in example 1. And as you can see, price is heading up again, but it cannot close above that red baseline. And because it cannot close above that red baseline, this strategy is still valid, and we're now waiting for price to close inside of the green area again. And now that price has closed inside of that green area, we do exactly like in example 1, and we make sure that current price is lower than previous lower low. The greatest thing about learning this strategy is that after a while you will see these setups occur and they will naturally fall into your lap instead of you chasing trades when there is actually no real setup for you to trade on. And as for the stop loss, we do exactly the same like in example 1. So now we put our stop loss just above the latest candle and over that red baseline. And for take profit, this time we are going to trail our stop loss until we feel comfortable getting out. I hope that you found this video helpful, and if you did, please hit that subscribe button down below. It really helps out. Thanks for watching. See you next time.